The housing market is the backbone of the economy, really. If they let that fail, they're letting the whole economy fail.
Yeah.
If they let the whole economy fail, they're out of government.
Okay, so in this one, we're going to be talking about the sentiment in the real estate market. We're also going to be talking about, the whole doomsdayers narrative that I see quite a bit. And let's talk also about the Bank of Canada changing the goalposts for people that have to remortgage after they mortgage for 2 to 3%, and then they have to remortgage for like 5 to 6. Okay, talk to me about the local market here that you're seeing.
We went from
Windsor, Ontario.
Yeah, we went from 0 to 100. It was kind of like dead, super hot. There was kind of no in between period.
Super hot.
Like super hot.
It's
like
super
10,
hot again.
12, 17 offers, 30,
Really?
70, 150 showings on properties.
Really?
Nothing for sale. Anything that's for sale is getting all this activity because there's not enough inventory to be absorbed. And like it goes back, we've been saying this for a while. Like I know, like you talk about the doom and gloom. Obviously, the world could theoretically end, but it never does.
Yeah.
And when we go back to the fundamentals of the markets that we like to invest in, those fundamentals are very strong.
Yeah.
Which is everything boils down to supply and demand. We don't have enough houses. There's everybody wants houses, right? Mm-hmm. It's not a want. Mm-hmm. It's a need.
Yeah.
Okay, so the demand for housing doesn't change. The affordability does.
Yeah.
You raise rates 10 times in a row, you're going to have affordability issues.
Yeah.
Until prices come down to match the new levels of affordability.
Yeah.
Then supply demand takes over.
It's almost like a 2-step forward, 1 step back all the time.
For whatever the government does
Yeah.
it ultimately backfires.
Yeah.
And the ways that this is backfiring now is that all the builders are on pause.
Yeah.
So you're delaying the housing.
Yeah,
prices.
and you see that 2 step forward, 1 step back all the time because it'll never go back really to, say, for example, pre-pandemic housing prices or even current or during pandemic pricing. So it'll never go back down to that, right? Or I should say pre-pandemic pricing.
Yeah.
It'll never go back down to that. So you took 2 steps forward, maybe even like 5 steps forward during all that time, right? Yeah. And then you're going to take maybe like 2 or 3 back, but you're still 2 ahead.
And here's what people think though.
So it's crazy.
They think it's going to go 7 steps back.
Yeah, yeah.
Right? We went 5 steps forward. They think it's going to come all the way back or even further back to the end of the world.
Exactly.
And it's just like, unless literally the whole economy collapses, the U.S. dollar collapses, the banks fail all across the world, and there's just this massive cataclysmic event that you're not going to be worried about your 7%, 20% dip in the real estate market. There's going to be bigger issues.
Yeah.
But this is where, right, we've been predicting that the Bank of Canada, the federal government, nobody wants bank failures in the country. Nobody wants the middle class to lose their houses. So what are they going to do? They're going to step in to intervene and not allow that to happen, which you brought it up in the pre-show here.
Dude, I've been how long have I been saying this shit for?
Oh, man.
They're going to move the people that have the money or that hold, I can't remember the saying exactly, but the people that hold the gold or have the gold or whatever will just move the goalposts or change the rules in order to get their money. And that's exactly what's happening right now.
And they always will.
Yeah, and then the people are arguing like, hey, listen, like people are going to be like lifetime mortgagees and the banks are going to own them and the government's going to like, yes, I have.
They already do.
Like, exactly.
Yeah, the banks already do. They own everything.
And not only that, I have 0 fucking plans to ever own my home, my personal residence outright. Fucking 0.
Why not, Dan?
Because I leverage the fuck out of it.
Exactly. People gotta understand.
Yeah, exactly. And I'll give you a perfect example. So I sold my other house, right? I sold my other house. I made a couple $100,000 on my other house. Then I bought a new house. Got an 80/20 LTV on that particular home, right? On my new house, right? I say new because it was new. It's not new, but on my new home. And I ended up pulling out, I think, around $400,000 of equity. So I took that equity and I did a private mortgage with it at 12%, and I was paying 4%.
Simple math.
4? Something like that. 4.
Yeah.
Like, I made 8% extra on the equity from my personal residence, and I will continue to do that. I understand that some people are uncomfortable with that. I get it. But I am very comfortable with that.
If you're uncomfortable in that, you're probably going to be in the middle class for your whole life.
Exactly.
Like the system is built off of debt and leverage, and if you don't understand how to use it, if you're unwilling to take the risk of using it, you cannot escape the middle class.
Exactly.
Like, even if you're a very high income earner, the best you're going to be is kind of like, upper middle class, unless you really live a downsized lifestyle. But
Yeah.
so it's part of the game. It is the game.
Yeah.
It is the game.
Yeah. So basically, I leverage my personal residence so that because your personal residence is not an asset, it's a liability. It doesn't pay you anything. So how do you actually structure your personal residence to pay you something? Pull the equity out of it and use the equity to fund a cash flowing asset.
Yeah, every time you
That's
make
it.
a mortgage payment, this is the way I look at it personally. Let's say the interest rates are 5 or 6% right now. Every time I make a mortgage payment, my ROI is about 6%.
Yeah.
Fine, right? Because it's saving me 6% in interest.
Yeah.
Like there are so many opportunities in the free market to make more than 6% on your money, or 5%,
100%.
especially when the rates were 2-3%. You're stupid for making those payments. Realistically, it's just that for some reason, obviously, we've been taught that debt is scary and bad until you get your financial education up and you realize, like, no, that's the game. So our point here is that we've already seen it, right?
You know what's crazy? Actually, going back into that, I have an $800,000. I ended up going back. I got an $800,000 line of credit on my house right now, which I don't use.
Yeah.
I'm waiting to see if I want to use it. But think about that for a second, right? I ended up getting it. I knew it, right? Like, I'm like, okay, at some point, like you've also always said, at some point, the market's so hot, it's got to come down. What goes up is going to come down or whatever. So I ended up going back, getting my personal residence appraised again. It appraised for double, right? And I was like, holy fuck, I can't believe it appraised for double. Obviously, the market was stupid, right? Appraises for double, went right in to get a line of credit on the equity that I built up over like 1 or 2 years, and then got the $800,000 line of credit extra. Boom. Now the house, obviously, maybe you can only justify a $400,000 line of credit at this point now.
Too bad.
But guess what? I got the $800,000, and at that line of credit, I think I'm in like 4-6%, 5-6%. I know I could double. That I know I could get at least on top of that 6%, 8%.
Yep.
I know I can. So this is what I'm talking about. Just waiting for that right opportunity. I don't want to get crazy.
When you're using borrowed money to make money, of course you increase your risk, right? Like levered money on whatever.
100%.
But either way, I have home equity lines of credit on all my properties because for that very reason. I don't go out of my way to use them. I prefer to use cash. But if I want to, or if an opportunity comes up, I have the cash available. So what have we seen? We've seen a massive pivot from the Feds and the Bank of Canada.
Yeah.
And Christina Freeland, the finance minister, who I don't know how she got this job, to be honest, what her credentials are. But they've already come out and said, like, look, we are making sure that the banks have the tools necessary to help Canadians make their mortgage payments and not put them in a tough situation. We realize that we've raised rates super quickly. We've, kind of went against our word saying that we're not going to raise rates until 2023. They rose them super quick. So they've allowed for extended amortizations. Like for all my stuff, right, on variable, I'm basically not paying off any of the principal, right? They could easily say, no, you got to keep your amortization the same, which means my payments would go up drastically, but they're not doing that. They're just extending the amortization period. Like 100%. Some of them are like 60 years. Right. And I know, like, over the ebbs and flows, it's all going to balance out. Whatever. I don't really care, and I have no intention of paying them off anyways.
Why would
and
you?
I have plenty
Seriously.
of equity in all of them. So it's kind of like what we've been saying all along. Realistically, do we think the Bank of Canada, do we think the Canadian federal government wants that crash to happen, right? Do they want the middle class turning in their keys? I'll tell you what, it's not good for votes, right? Like it's just not.
No.
You see what's happening when the population gets pushed to the edge. They riot. They take to the streets. They'll overthrow the government. The government's real job, right? Even if you think that this is some big scheme to get more and more power, which maybe it is, but you keep the population appeased
and
right?
numb.
Yes,
appeased and numb.
Give them. Yep. Oh yeah, your payments are fine. And what they're actually going to do, in my opinion, they hide this through inflation, right? Money printing. So you already saw their announcement. What are they doing? A grocery rebate or something? $400.
God, this is so stupid. It's unbelievable.
It's stupid and it's nefarious because it's going to trick the populace into thinking, oh, they care so much, but really it's actually inflationary, like, more than anything. But our point here is that they're just keeping the game going, and that's what they're always going to do.
Perpetuating it. It's unbelievable.
There might be times, right, like in the U.S. 2008 crash, where like the system gets a shock that they can't really fix quickly, but they will fix it eventually. But what they typically try to do is just avoid that shock and just keep the game going, and they do that with money printing and inflation.
Yeah. Well, I saw this. Remember I was telling you, I don't know if I did tell you this, but the lender that I was working with on Plate and Place there, he had mentioned right when this SVB Bank, the Silicon Valley Bank, went under, whatever you want to call it, crashed or whatever, or failed. Right when that happened, I asked him, okay, so what's going to happen here? Are we going to see another rate hike? This was before the 0.25 basis points that they actually rate hiked. He was under the impression that they're not going to do anything because that might be enough to shock the system and not have to require another rate hike from the feds, and things are going to start settling down. Now, they did it anyways, but only at a quarter point, so it's starting to stall out a little bit, right? They don't.
This is at the U.S. side,
This is the U.S., but what's happening now is that banks are completely tightening right now. Like the lenders, like it's very difficult to get a loan right now in the States because everybody's tightening right now. Yeah. Everybody. So with that said,
that cools inflation.
Exactly. It cools inflation. And now what's going to happen with housing? If you can't get loans, it's going to tighten the fucking market again. Yeah. Right? Yeah. Nobody sells. Nobody's going to be buying. Nobody builds. Yeah. So how do you get a fucking loan? The only options are agency, and some people just don't. Some deals just aren't agency, and sometimes the agencies over in Fannie, Freddie, all those agencies over in the States, sometimes the deals don't make sense for them to do, or the deals themselves using agency lending doesn't make sense. Yeah. So what happens then? They can say they're open for business all they want, but if the deal doesn't make sense for them or doesn't make sense using an agency, where the fuck are you going to go?
Deals aren't gonna happen. So
exactly. Yeah, like I talk to the lenders all the time over in the States.
Yeah, it's a good point. So these are like the ancillary effects of these rate hikes are happening, right? Yeah. You're seeing job layoffs, you're seeing tech layoffs. Everybody thinks, they raised rates 10 times in a row, inflation should come down like that. No. It takes 6, 12, 18 months. Yeah. It's happening, right? You're seeing it trickle down. The impacts are being felt more and more every day, every week. Yeah. A couple bank failures, more and more stress on the banks. They tighten lending. They're going to probably lose a bunch of jobs. Yeah. I've heard that like a lot. I saw a chart today. The U.S. banks went from 35,000 20 years ago down to 4,400 now. So I think they're trying to consolidate the banks as well. Probably more like a Canadian style. Yeah.
More control.
More lenders out there, less control you have, right, as a government. Yeah. So there's probably some of that stuff too, right? For sure. But it's anti-inflationary is our point. Yeah. And our biggest thing here is that once inflation is under control and once rates are normalized, right, whatever rate that is, and normal is just what is accepted by the population, right? 18% was normal whenever, 12%, 6%, whatever's normal is going to be just what we all come to expect. So it's even our current rates now are becoming normalized, right? Yeah. We 5% is just normal.
Yeah, which arguably that's
historically
it's actually like a normal rate, like 4.5%, 5%. That's actually not even a bad rate.
100%. So exactly. Yeah. So once normal inflation, once we have normal rates, then the market goes back to fundamentals of supply and demand. U.S. is millions of homes short. Canada is millions of homes short. We're delayed on building, or delayed on this, that, whatever. That's why the market is exploding. Yeah. So people, I'm working with some
also the whole sentiment, the mass confusion, like you said, things are normalizing. And I fucking said this. So basically people missed the boat in Canada for sure. So I've been saying this for fucking ever.
Yeah, I just saw your post the other day. Best time to buy is when
there's mass confusion in the fucking market.
I love how you didn't say fear or anything like that. You use the word confusion. I love it because there is no clear answers right now. Yeah. And that's the best time.
And that will be fearful for people. That will cause fear, right? Confusion causes fear, right? They get scared. They don't know what the fuck to do. Yeah. But mass confusion is the right term. And you're still seeing that in the States. The last Fed announcement that they're not increasing rates, I would bet and venture a guess that that's when you started seeing the pop in the market again. Am I accurate?
Oh, big time.
Exactly.
Big time.
Exactly.
It provided stability. Exactly. And it allowed people to plan their finances and
they're no longer as confused. Yeah.
Right. My conversations right now, with a couple first time buyers that are entering the market again, they were on pause for 6-8 months.
And investor specific?
No, regular buyers is we're worried about getting priced out again, right? if you're a first time buyer, you have a budget of $400K. You have like maybe a 6-month window. If the market keeps going, where you're done, because March 2022, the peak of the market, if you had a $350 to $400K budget, you're on the West End, or you're in like a subpar location that a lot of people will just, they might just turn into renters. Yeah. So they're actually afraid of missing out. And like, I don't like to like try to like convince people to buy or talk about hype, whatever. But if I'm a first time buyer and I'm not in the market right now, I'm more afraid of getting priced out than I am of like buying something and then seeing another dip.
Yeah.
Like I'm more worried about where this housing market is going, which is pricing out the next generation.
Yeah.
Of people.
What's it going to do? Is it going to go like this? This was exactly my same sentiment when I started buying back in the Great Recession there in 2008. That's when I started buying stuff. I started buying stuff because I was like, how the fuck worse can it get? Like, because
it's honestly a very good point.
It really was.
People should listen to
it was a little bit different because I was buying stuff at like 20 grand, 40 grand, 50 grand. Yeah,
but with inflation, 300, exactly. 400K is the new 60 grand.
100%.
It's the same number.
Totally agree.
It just changed.
So my sentiment was, when I'm buying something for 50 grand, I'm like, so what? If it even gets chopped in half again, I'm at $25,000 value, right? It can't get worse than that. Things aren't going to go to free, right? Unless you're like literally, River Rouge in fucking Detroit, but where they were selling like $1 at a time. Mm-hmm. But nonetheless, like that shit doesn't happen anymore. But nonetheless,
never in Canada either.
Exactly. So what's the worst that's going to happen? It's not going to go down to whatever. So I was just like, fuck it, I'll just buy it. And then not only that, what I was seeing during that time was that rent wasn't also being chopped in half. Rent was marginally not even moving, right? So
this is a good point, folks.
You get what I mean? So rent wasn't really going down all that much, or at least in conjunction with the value of homes. It was pretty much staying the same. Mm-hmm, mm-hmm. Maybe $50 or $100 off because the market in Windsor was just shit and everybody was leaving, right? But my mentality was back then was, fuck it. I already know based on 100-year fucking graph that real estate will always continue to increase in value no matter what. There's going to be lulls and there's going to be highs and all that kind of stuff. But I'm pretty safe if I put my money in this. And then here we are again, right? Even if my shit gets chopped again, what's it going to go down? Another 20? Okay, I'll take the 2, 3, 4 steps forward and then 2 to 3 back. But I'm still making that 1 or 2, and then in a year or two, I'm going to be right where we started, and then another year from that, or another 2 years from that, I'm going to be above where where we are now.
Yeah.
So
I love this analogy.
Or where we were even at the height. I'm going to bet that at 5 years, we'll probably be, call it even 10. So what? I'll wait fucking 10.
Yeah.
I bet you we'll be higher than we were at the height of what was it? February last year, March of last year, 2022. I bet you will be higher than that at some point within the next decade. Yeah. So what the fuck's it matter?
I love that.
Seriously.
Yeah, I'm really loving this analogy of 2, 3, 4 steps forward, 1, 2 steps back.
It's true.
That's
it's
just
accurate.
how markets work.
Exactly.
And when you put it in that like forward and back mentality, it helps you kind of like picture things and how the game actually works. And what's happening is like nobody wants to buy during the step backs because they think, well, I'm going to buy at 2 steps back, but then it's going to go 2 more. When in reality, it's like you said, okay, I'm going to buy now. Even if it goes another step or 2 back in 5 years, I'm going to be 4 steps ahead.
Yeah.
And you're going to be collecting your rent in the meantime because guess what, folks? Everybody needs a place to live. And even when prices were declining 20% in Windsor specifically, what do you think was happening to rents?
Yeah, exactly.
They're going up, man.
Yeah.
They're not stable. They're going up.
Yeah, they are.
And I know.
And high and
20%.
Quick.
Abnormally high. So what do they say? Like, housing prices are a little bit choppy, but rents are linear. They're like this, slow, steady rises.
Yeah.
Prices can go like this with rates and stuff like that, but rates don't impact rents as much.
No.
Especially when you have a housing shortage, which is just, it's not going to be fixed.
Well, if housing prices come down, but rates are up, but affordability is worse, rents will still continue their increase.
Yes,
they will. It's just rents follow more affordability than anything, right?
Not necessarily
not
prices.
Not necessarily housing prices, right?
People have to realize you're getting qualified at like 9% right now.
Yeah.
So you go to the bank, you make $100,000 a year. They're running your numbers at 9% interest or something. 8.5%, 9%. how much do you think you're going to get qualified for? Like 350. And then a lot of people are like, well, I'm 30 years old. I make $100,000 a year. I'm not going to live in this 2-bedroom bungalow for $400K.
Yeah.
Why am I not qualifying for more? Well, because the rates are too high.
Yeah.
So they go rent.
Yeah.
So it becomes this never-ending cycle. And I'll tell you what, folks. Here's what you need to know. If you're waiting for the market to crash, we need to have excess supply. Okay,
Yeah.
That's what the crash is. Give me a scenario in Canada where we end up with excess supply for housing. I'm trying so hard.
Yeah.
And we're so far behind. I just can't.
Yeah, you'd have to get rid of the government, and then allow developers and builders and whatever like free reign to build.
Free reign. And how long would that take? Let's say that we had that.
How many are we short right now?
3 million by 2022. So we need 5 million homes. We're on pace to build like 2 million. That's
based on the current trajectory.
So we're 3 million short of our target.
That's based on the next 7 years, correct?
Let's call it 7 to 10 years. I don't know the exact dates, but I think 2030.
By the time 2030 comes around, we're projected to be having built 3
We're projected for 2 million homes.
2 million.
We need 5.
Yeah, okay.
We're 3 million homes short.
Yeah, well, so there you go. Yeah. So the only way to do it would be to reduce red tape from the government.
Now, let's say we did. How affordable, how cheap would these houses that are being built be? Like, how much can these builders build these homes for?
Yeah.
If you got to go buy the land, a single-family detached home.
Yeah.
Like, what's the cheapest you think, right? Let's say
right
in a core area, right? Not like out in some 80 minutes out of the city or something. Like, if you were within 20 minutes of the city of Windsor, like, how much do you think you could put a house up for? Maybe $500,000-$600,000? Plus your margin of profit.
You want to hear something crazy? So you know how I want to build that extension off my house, like the garage and the upstairs and all that kind of shit, right?
Yeah.
So I had a quote to build $450 a foot.
Oh my goodness.
Yeah. Now, don't get me wrong. I wouldn't be building like absolute shit, but I had him just spit out a number of builder grade shit. And this was like, don't get me wrong. I bet you I could probably shave off 100. Maybe, who knows? Maybe get that down to 250, 300. Guy just doesn't know what I want in the house, right? Or with the extension or whatever, right? There's, I live on the water. There's different permits. I have to deal with IRCA, all that kind of shit, right? So he's factoring all that kind of bullshit in,
I
right?
see,
yeah. Like we got to rip up part of the driveway because we got to raise that portion of the house by 18 inches. Like it's crazy. Yeah. So there's a lot of other costs, right? So call it for a decent new build, you're $300 a foot.
Yeah,
right.
That's fair.
So what would be the average size of a new build or average, like say bungalow, 1,200, something like that, 1,100?
I mean, nobody builds those, but
okay, well, whatever.
1,400. I would say above grade.
You're 420. That's like no land, nothing.
Yeah. That's my point.
No
so
basement.
You're looking and no profit margin.
Yeah,
theoretically, unless their margin's built into that. But
exactly. Maybe it probably is. Yeah, I would say it probably is. But you're still only 13%. I think that's the average home builder profit margin is 13%.
Yeah. So you would need unhindered building.
Right now, buddy, at 8-9% is already priced out of the market.
They're at 300 to 400K. That's their budget.
Unless you get what I mean?
Yeah, that's my point.
That's 420.
Oh, out of that
that's
new construction. Yeah, you would need another
exactly no land.
Yeah. So that's the problem, right? So the problem isn't going away anywhere, and the Build More Homes Faster Act, if you read into it, there are some things where they're trying to stimulate development, but in reality, most of the stuff is going to be rentals. It's not going to be for ownership. It's not going to be affordable.
No.
So we're going to be faced with the same problem. So I guess if we have to summarize this, it's, the housing market is the backbone of the economy, really. Mm-hmm. If they let that fail, they're letting the whole economy fail. Yeah. If they let the whole economy fail, they're out of government.
Yeah, which arguably is what's happening right now because what they're doing is failing, right? And their economic and monetary policies are not working well for the economy.
Not. They're horrible.
So that's why,
But here's how they fix that. Turn on the money printer. And they hide it with inflation, and people think inflation's normal. It's not. No. It's not really. It burns you. You're going to work 60
not at
hours.
These levels.
Yeah. Even normal inflation's actually not really normal. 2-3% is it's just eating away at your buying power.
Yeah.
You're fighting to stay afloat.
Yeah.
When in reality your money should be increasing in value over time, but it's not. It's the opposite.
Yeah. So let's increase the handouts and bump minimum wage.
Yeah.
That'll do it.
It's messed up, but that's going to be inflationary, folks. This is
100%
why
it is.
this is why you
100%.
have to understand the monetary system's designed against the worker. It's
really
designed,
is.
Because of inflation, because of money printing. The value of your dollar is going to always go down.
Yeah.
There might be periods of tightening, but they can't continue to tighten.
Yeah.
It would destroy the whole system.
Yeah.
The system is inflationary and it is debt based, which means you have to use debt and inflation to your advantage, which means you need to own limited assets that appreciate with inflation, or your money is rotting, literally.
Also, that cash flow, that's a very important
And
point.
of course, that's
it has to
beauty
pay
of
you
real estate.
monthly.